Assalamu alaikum. My name is Huang Jin. Today, I and my friend Zor are going to present the relationship between US dollar, gold, and oil. After World War II, the world needs to restructure its economic and monetary systems. So the US, Western Europe, and some other countries established the Bretton Woods systems. The Bretton Woods system is a landmark for monetary and exchange rate management established in 1944. The Bretton Woods system was developed at the United Nations Monetary Financial Conference held in Bretton Woods. So the major outcome of Bretton Woods conference include formation of IMF, International Bank, and other international organizations. And most importantly, it wrote that the US dollar is only currency pegged to the gold, and other countries' currency is pegged to the US dollars. It means most of international transactions is settled by US dollars. In 1971, the US unilaterally terminated the convertibility of US dollar to the gold. It means the end of Bretton Woods systems. After US terminates the Bretton Woods systems, the oil crisis have severely hit the American. So the US economic condition has taken a sharp turn. But the US has reached several agreements with Saudi Arabia, the world's largest oil producer. The US has agreed to provide Saudi arms and equipment on the condition that US dollar is the only pricing currency to the oil transactions. It means US dollar has closely linked to the oil. And any country wants to have oil transactions must have sufficient US dollar reserves. The US dollar and the gold are both the most important reserve asset, but they are different in nature. The US dollar is paper money which have no value itself, but when you're holding US dollars, it can bring you interest income. Gold is some kind of metal, and itself have very high value, and also has a function of avoiding inflation and avoiding risk. But when you hold gold, it cannot bring you any interest income. The trend of US dollar is positively related to the US economic situation, while the trend of gold is negatively related to the global economic. When the US economic is booming, the global economic is usually be more optimistic, which leads a strong dollar and weak demand for gold. On the contrary, when the US economic is weak, the global economic situation is not that optimistic. It will lead a weak US dollar and strong demand for the gold. On the other hand, when the US dollar is depreciated, an investor will choose other currencies to purchase the gold, which means you cost the same amount but you can buy more gold. So in sum, we can make a conclusion that the relationship between US dollar and gold is negatively related. As we mentioned before, since 1970s, the US dollar becomes the only pricing currency in oil trade. So we have the nickname we call the petrodollars. So the oil is raw materials of chemical products. It's the pillar of modern economic. So if the oil price increases, it will make everything more expensive. So as we can see from that, if the oil price increases, it will bring inflation, and it will make dollar depreciate. If oil price decreases, it will bring deflation. So when US dollar is weakened, the oil price dominates US look cheap from the perspective of euros or yen. And on the other hand, when the US dollar appreciates, the oil price dominates the euro or yen weaken. The demand of oil will decrease. So in modern world, the most economic crisis is related to the oil prices, especially when the oil price increases, and it will bring inflations. So in conclusion, we can see that the relationship between oil and the US dollar is negatively related.
Hi, Assalamualaikum warahmatullahi wabarakatuh. So continue with me. I am Muhammad Zulkarnain bin Sujud. So before this, you see with Huang Jing. So right now with me. So what I'm presenting today is case study 2020, the real situation of the relationship in the market. After we have learned from Huang Jing, so we will see the real situation that happens in the market. Okay, so to recap, the general relationship is if the US dollar appreciate, oil and gold will depreciate. Meanwhile, if the oil price increase, gold price also will be increased. Okay, as you can see in the gold chart, from 2017 until the early of 2020, the gold price is increasing. It's the same if we go to WTI crude oil from 2017 until at the early of 2020, also it increased. So the general relationship is accepted as they are positively correlated. Okay, but there is a disclaimer. There are a few situations that they can be vice versa. Yahoo Finance stated that gold and oil are like siblings, but they are not twin. They only 60% positively correlated. In this case, we will show you how coronavirus affect this relationship and the reason behind it. Okay, so this is the gold chart. Okay, gold price at the 2020, it goes up to the very highest in the history. Meanwhile, the WTI crude oil, the oil price goes significantly drop. So in this case, they are vice versa. They are negatively correlated. So why? What is actually happened? Why they are not following the general rule? Okay. So as what we mentioned before, they are siblings, but they are not twin. Most of the time, they are positively correlated, like what I saw to you from 2017 to 2020. Both increase slowly and steady in the same direction. But due to a few factor, 2020, they be vice versa. So this year factor is coronavirus. Okay, so how coronavirus effect? How the effect? Many countries apply lockdown policies such as China. So in Malaysia, government apply movement control order. No car on the road, no consumption of fuel, thus the price of oil dropped significantly due to its low demand. Okay, so investors see this situation as economic crisis. In order to protect the value of their wealth, they invest more in gold, and many countries bought gold in large quantity to protect their country's asset. Consequently, increase the price of gold as the demand increase. So that is the reason why this year they are negatively correlated. They are vice versa, not like the general goal. All right. I hope that you can understand the real relationship, and because we already present to you the real situation, what happens in the market. So I hope you enjoy this video. See you in the next session in the next video. Thank you.